Welcome to TradeMBI.com. This is John. This report is for the 5th of May, Cinco de Mayo. There you go. Uh, not the case here. We just finished a big 4-day weekend in Italy. Let's turn straight to the market. We had our blue candle, interestingly enough, on a lower close, and it produced a lower close after it, though it had a nice move to the upside. So very easy to catch at the upside, but we'll mark it as a closed below, even though it was pretty easy to capture the move that took place. So it was, I don't know, I didn't have any objections to it though. We could see now with the steel moving below, that is much more negative from a daily standpoint, and we still did not get any cross. The fact you have the green rising still enough to keep things in check, but the deterioration, at least early on here from this steel signal, is starting to show. You didn't get a move up of the sign, so not a real active setup by shorts yet. If they had taken out this previous peak reading, let's get a number on it real quick while we're here. 246 on the cyan. Currently we're at 122. You got to take that out. If that goes out, then you're going to end up with a higher peak no matter what, and that will result in lower. So bear that in mind, that while there's weakness, the potential is it can get worse. Didn't get a crossover below yet with the steel, but you can clearly see now the two lower peaks. Slight turn down here of red in that, right at a zone, and that's always, I pay attention when we get to these levels. You know, when you're like in between rising, not as big a deal, but when you reach the zone and don't break through decisively. Well, last time was right here, and then we ended up with this peak move that came up to here, and here you are again. So Monday is going to be an interesting and critical one because a failure to break through on that early, and should know right at the beginning, will be a problem for the NASDAQ at least. And the YM had seen much more severe decay than all of the other ones. So clearly that was already in a sell from the previous day, and then just continued the pattern, and as well of the green moving lower. So YM, NASDAQ, ugly, S&P getting there. It was surprising though, because you had a little bolstered support here with the slight improvement in the USO, and this is where I talked about selling the puts. Not a bad way to go, given that we could see a little bit of positive. It wasn't an all-out buy because we're looking at the negative red there and the potential of retracing, but always nice to be able to see that develop as it takes place. Gold took a nice rally off of it, and it's always an interesting one whenever, and I pointed that out, where we're above the red with our green, doesn't dip below, and then boom, all of a sudden we had this contraction of the green and cyan, so the potential is for that to continue. And it would be right at the top side of this range, so break out of that little space here that we've seen for the last, well, geez, since April, going all the way through. Breakout there would definitely signal the potential for some ugliness for the market. X was another one we talked about, the potential you could sell some puts on, even though we were just cautiously expecting not a whole lot. And that's what selling time is all about when it comes to selling puts as a conditional buy without committing early. Should it retrace? Likewise, CLF. Now that actually is crossed over, so it negates the negative red there, so any retrace on that one would definitely look attractive for re-entry points. And so looking at the intraday, definitely worthwhile. And that started all the way back over here. You dipped down again and you produced new buy signals coming back over there, and then the follow through. So there's been plenty of opportunities to jump into the rising momentum of it. AIG, a little bit of a retrace. We had stayed below with the green under the red, and we finally had the transition of red below. The only thing we didn't have was cyan moving above, and we finally had that start out at the open on Friday for AIG, and you can see the result of that, because that begins what could be a very strong DOC, if not for the fact that steel is so far down here. You really need to see steel move up for any serious idea that the downturn is going to continue. I had forgotten to put up my WLT the other day when it was coming through. We had retraced the lows on higher extreme histograms. Not the first time that we had done that, so it was just kind of sloppy, and then it gave a buy cross on the open bar for that 78 minute was a little clearer even on the intraday, and it took off from there. So I know everyone thinks that something is dead. You really just have to stay away from the noise factor. Interesting that we've had this little push up from where we had sold out on the 50K, but it's returning to that. But look at the DOC short spread that developed. It was right here, starting with cyan dipping below, and then you had this steel dip below the cyan, where the cyan had already gone. I mean, the steel had gone below the green, was the early trigger. You had a little bit of a divergence to the upside, and then once the steel dipped below the cyan, you began to realize that things were in trouble, and that's where the red started to peak and roll over, and then it confirmed itself a little bit later, and the spread has grown. And now, more problematic too on that 50K view is that you do have the steel moving up here, and a little bit of a rise above the zero line with the steel, with these three continuing lower, and you can see a significant retrace, at least all the way back to where the 50K sold out of its original trade, based on its dip below the red line. That would be the retest point down there in the 67 or 8 range. So keep that in mind. Let's go ahead and take a look at our radar screen. All right, where are we going to start? The Dow. A lot of red on that Dow. That's a lot of red. And we'll go to the S&P. Likewise, increasing the amount of red. So we've gone from what was sort of an in-between neutral green and red to just a little bit more preponderance of red. Likewise, here you can see a lot of new cells or ones that are continuing in that dark red. Yeah, look at our high flyers. I like this because it gives you kind of a quick composite look at all the markets in a broad sense, just from a visual color standpoint, and kind of gives you a heads up. It's like, okay, do I have most things selling or most things moving into a buy? Let's flip over to an intraday real quick. All right, looking at our 5K chart, when last we looked, we could see that we had developed our beginning of what was a DOC spread to the negative side, which then came across and got very divergent and then went way overbought in the extreme, and of course retraced the entire move. Talk about a shakeout event right there. That certainly was a little wild, and that started pre-market, and then as things solidified, all you did was come back down and satisfy by moving lower for where the pink dot was. You ended up with a secondary divergence of the same construct right over here, but again, just a matter of time and utilizing the readings, waiting for this overbought to show up, and that was positive extreme happened right there. Still continued up a little bit from there, but it took a few bars, and then the cascade lower took place, and no shock with that, and then it just traded sideways from there. So it was an interesting kind of choppy event. It was plenty enough for trading both sides of the equation. The fact that you're in the deep red coming through here just meant that you were going to retrace it, so the pop became a good opportunity. Let's go ahead and take a look at the alert stocks. Apple, from its intraday, we were talking about that we weren't expecting much of a retrace. In fact, that the little dip there, any new buy signal was worth an opportunity to jump in on it, and it's held up just fine. Amazon, we could see that there was just a nice little turnaround with the buy configuration in there. No change yet, but the reality is you're going to need to see a much stronger move by the green pivoting up here, and then even the red moving above to continue a move, but seen worse. Google, likewise, same configuration. This one a little bit better because you can see the green crossed above there. You haven't gotten above on the red, so still quite a range of spread. It just means you can't expect much strength in the move, not to mention we're in the deep red here, so we were expecting a pullback to within that. Not a shock. In fact, you still have the dip below the red line here on the extreme that will have to be retested, and that would be the expectation with this red signal. What I'm looking for, though, would be the first flattening of your red line. But needless to say, on any little pop there, not likely to hold. little bit more gentle on Netflix because it's not in the deep red. Coming up through, just can't seem to get the green across, but you have the input of the red moving higher and actually even white as well. So it's kind of interesting signal here, the direction this is headed. A little bit bizarre because it's unusual to have the steel stay above like that and then not have a green cross above the red and then to even have the white outpacing the red. It's kind of unusual. What does that mean I would do with it? Stay away from it until it clears up from a reading standpoint. Simple as that. Some people don't like to hear that because they want to trade their same stocks over and over, but they're not all in a good condition to do so, and you need to be able to rotate around. Nice crossover for PCL in that. It is still within, well, it just started the negative red right there, so the likelihood of seeing further retraces is very probable. And it's going to take some work because it's got to get above that negative 13 zone to be of any real practical value. And Tesla, still not looking for a whole lot there. I mean, that's pretty weak as far as it goes. Still rising with the red, and the fact that it made the higher just needed to get above the -7. The fact that it didn't do that yet, problematic. The fact also you've got lower now pivots on your steel. The first steel dipped below the cyan, and that is a clear short signal. Baidu, nice little buy crossover from that standpoint. Heading closer. It's going to have to continue on that trek. I would be looking for any additional weaknesses since you still don't have that green crossing above the cyan to use as opportunities to jump into it. And Twitter. Likewise, these are all looking almost identical, so they've all kind of turned at the same point, though the turn has been very tepid and weak, and in some cases a lot weaker than the previous up move, even though you're at the same price values in a lot of cases. But clear, you get this cyan moving below zero. It's always a sign of improvement and going in the right direction there. Last one real quick, Facebook. And likewise, finishing lower with a yellow dot buy, and that's just because the crossover very weak and still not above the red, though the white improvement also interesting, and then having the steel so far above. So I think Facebook opportunity to sell puts on any continued weakness is a powerful way to go without being too exposed. So there you have it for the interim. We have to really see what happens for Monday now, because I think that becomes critical as we see things deteriorating from a reading standpoint, particularly for the NASDAQ and the Dow. And if that spreads through into the S&P, then we could see some significant deterioration. As always, continue to look for me in private Twitter feed, Stock Twits. I'm doing a lot of programming coming in through this coming week, so I'll probably be a little bit sporadic in trying to get the adjustments on some of our paint bar colors to really reflect some of the spreads that I wanted to do. Obviously, a video for members on the DOC spreads and their various zones and some of the things to look for. So we will talk again tomorrow. Trade well.